What is up, everyone? Nick here. Welcome to the show if you're new. Thanks for coming back if you're not. NIO has been on a bull run as of late with a virtual non-stop newsreel. They have been releasing updates faster than I can keep up with, and we have an absolute ton to cover today. In today's episode, we'll be talking about their April delivery numbers, their new upcoming facility, which is already underway in terms of construction, their reactions following their Q1 earnings and their call, and finally why I think shares are going to be extremely volatile in the next few weeks and some concerns I do have. Before we get to it today, Webull is giving out 2 free stocks worth up to $1,850 for free. You can trade before and after hours markets. This is a 0% commissions trading based platform. It really is a win-win. This offer ends soon, guys. You do not want to sleep on it. Alright, no time to waste. Let's jump right into it, ladies and gents. Alright, so let's start off with their delivery numbers. NIO, in the month of April, delivered 7,102 vehicles. And right off the bat, I have a couple thoughts here. I know a lot of investors online are concerned of slowing growth. This does indeed represent a decrease of 2.14% from their March deliveries, and this was primarily due to the 5-workday shutdown the company experienced earlier in the month. Now, excluding their drop in February, this is actually the first time where NIO has fallen in monthly deliveries since July of 2020. We saw roughly the exact same quantity of ES8s and ES6s sold month over month. However, we did indeed see a fall come from their C series, the EC6, delivering over 150 models less than in March. We're all likely more than aware now of the massive effect the global semiconductor shortage is having on the global EV market, and NIO is no different here. Li Bin, in the earnings call just a few days ago, stated that he believes this problem is likely to get worse before it gets better. The company has stated that they believe delivering around 7,000 vehicles a month is feasible for the next few months. However, this is indeed becoming less and less clear as the days move on. Electric vehicle companies and tech companies are essentially vying against one another trying to secure semiconductors, and there simply is not enough supply to go around to meet this whopping demand. NIO has been plagued by supply strain over a year now. This is all since their demand skyrocketed in Q2 of 2020. They have been consistently playing catch up and really have not been able to show their true capacity. Now, for any startup company, having demand far exceed supply is not always a horrible problem to have. It signifies that there is a market and that the consumer satisfaction is high. However, it does pose a problem for growth companies pushing for continuous investor interest. Investors of growth companies are stringently eyeing growth metrics, and any signs of this slowing can cause fright and begin a chain reaction into selling. We actually saw this when NIO posted low delivery numbers in February, and even though this was almost completely due to the low day count, the historically low auto sales in the month, and the Chinese Lunar New Year, investors still sold off shares. Do you think we may have a similar threat to share valuations and market capitalization with this decrease in deliveries? Now, the thing we as calculated long-term investors need to consider is that this issue is completely external from NIO's fundamental business. The global semiconductor shortage is just that. Global, and it's not affecting just NIO. We have seen Tesla, Ford, Volkswagen, amongst many others reduce guidance simply due to the shortage. Now, the difference here is that these other vehicle companies are much more established than NIO, and their investors for the most part are looking past this. However, with NIO as a young startup company, continual increasing revenue and growth metrics are essentially a must. With Li Bin stating that this issue could worsen before it gets better, I would not be surprised in the least here to see yet another production delay sometime within this quarter. I don't want this, however, I wouldn't be shocked. The company has guided for a slight increase in deliveries throughout the quarter of around 2%, of around 21 to 22,000 vehicles. So we do have a lot of factors at play here. We will have to keep a close eye on it. The April delivery numbers reflected a 125.1% increase year over year. However, we do need to remember how subdued the market was in April of 2020. I do think NIO is attempting to deflect some of this relatively negative news and low guidance with their Norway expansion. They are going to have a press conference scheduled for May 6th. I will have full coverage on. However, I'm not sure this is going to be powerful enough to completely stabilize the stock. We also saw this tactic play out with the new NIO Park, which NIO is part of. I will discuss this shortly. Now, NIO is already under strict scrutiny here from investors, and I do think we may see shares fall throughout the next few weeks, which brings me to my next point. As the management team from NIO stated, this is not going to be a quick and easy fix. The supply strain, compounded by the rapid acceleration of EV demand worldwide, is going to put immense pressure on the industry and individual companies to source for the foreseeable future. We are seeing this in many different industries, all the way to the mining companies actually pulling the materials out of the ground itself. It's a macro problem, and NIO is likely going to be under the watch for the next few months. Because of this, the NIO team was very explicit in stating for investors to manage their expectations for Q2. That being said, Li Bin stated, quote, "So far, NIO is doing okay," and this was in terms of their semiconductor supply. I do think we will see an extremely volatile time throughout the entire quarter, and I don't think we'll see much immediate success or rising valuations. However, on the flip side, I don't think we'll see shares fall too dramatically either. I think we'll fluctuate between the $30 and $40 zone, as we are beginning to see some strong support and resistance yo-yoing the stock. More on this shortly. Shifting gears to output. For the time being, NIO currently has one production facility at their JAC headquarters with a roughly annual production capacity of 125 to 150,000 vehicles. This is under their current production line, however, they are indeed adding an extension to this facility. With this extension, they have guided for a whopping 300,000 vehicle output capacity from their existing facility. Now, as we previously speculated, the construction of the company's new facility is officially underway as of April 29th. This exciting and new state-of-the-art production facility will be called NIO Park, and that may be somewhat confusing for NIO investors. We need to note the spelling here. NIO Park, spelled N-E-O, and not NIO, N-I-O. The park is being constructed and cost-fronted by the Hefei government, who is striving to become one of the EV epicenters across the globe. They are investing 50 billion renminbi into the first phase to reach an annual output value of a mammoth 500 billion renminbi. This in turn will lead to an annual capacity of 1 million vehicles and a behemoth 100 gigawatt hours of batteries. Now, I've seen a lot of misinformation going around the internet of people not doing their due diligence, and I hear people stating that NIO will now have a production capacity of 1 million vehicles per annum. This is absolutely false and not the case. Yes, NIO Park will produce 1 million vehicles per annum, however, this will not all be NIO vehicles. There will indeed be other companies involved, and reportedly, this could be more than 100 companies. Yes, 100. So not just NIO involved in the auto park. This park is called NIO Park, which I don't think was a coincidence. I think this signifies the city of Hefei's push and own stake within NIO. However, NIO can be translated to quote, new bridge, and bears the same name as the Hefei airport. This industrial auto park will be 11.3 square kilometers, which is around 12 times the scale of Tesla's Fremont, California facility, to put this into perspective. It's not just a production facility either, which is an important concept. The city of Hefei is making a brand and a culture out of the space, with R&D living areas, beautiful ecological and cultural areas, and obviously the intelligent manufacturing areas. So although massive in scale, it's not all dedicated to production. This facility will allow NIO to actually save 3,000 renminbi per vehicle saved through logistic costs alone. There will be much less movement per vehicle, with their facility being neatly streamlined. This will go an incredibly far way once NIO's large-scale mass production commences in 2022, the year I think NIO will become a global powerhouse. Now, this does represent a strengthening of ties between the state and NIO, which investors should be aware of. Hefei is actually fronting all of the costs of production, making it incredibly low risk for NIO, the company themselves. They are not investing in the infrastructure of the park whatsoever. The company is also planning on scaling up huge in the coming year in terms of battery production. There will be a dedicated battery facility at this industrial auto park, which in terms of logistics means that NIO vehicles can remain in the park and have their batteries installed, really streamlining the entire process and minimizing movement. It's basically an electric vehicle production facility haven, and I am extremely bullish on this. As I've stated before, sometimes it really does pay to have friends in high places. NIO is going to be investing in their own manufacturing processes and technology. They are also going to be overseeing the quality and operations themselves, so they are still very much involved. However, the facility itself will be built and owned by the city of Hefei. I personally think this is an ideal situation. This keeps NIO's large war chest relatively intact and ready for more strategic moves in the coming quarters. I really do think we'll see a mixed bag during this week's trading. Alongside the drop in sales throughout April, we could still see a slight sell-off. However, we also have the optimism from this park, the expansion into Norway, and for the semiconductor shortage to come to a close, ideally later this year, for long-term investors to be bullish on. I'm personally holding off from purchasing shares at these current valuations. I wouldn't be surprised to see shares extremely volatile in this week and potentially drop to the mid-30s in the coming days. I will keep you all updated throughout the week. Make sure you subscribe. Don't forget about the Webull promo. 2 free stocks worth up to $1,850 for free. There's 0% commissions and you can trade before and after hours markets. This can be crucial. The early bird does get the worm. Anyways, folks, I'll see you all in the next video. Take care. Happy trading. Cheers.